It's time to get to the business news now with Giles Beckford, who's in our Wellington studio. Hi, Giles. Talk to us about Westpac Bank and its annual profit taking a bit of a beating, but they're still feeling, jolly hockey sticks?
Well, let's not go quite so far. There seems to be one template at the moment for the banks that are reporting their full year earnings. Last week it was ANZ. Westpac today will have BNZ in a few days as well. And they all seem to be saying roughly the same thing, which is that our profits took a hammering because of COVID. The interest rate margins were squeezed. We've had to put aside a lot more money for bad and doubtful debts. And these are best guesses, of course, as to what they think the pandemic might cost businesses, households, and ultimately their bottom line. Their overheads are up. So all in all, their bottom lines are down. Now, before you start having some sympathy or crocodile tears for them, it's $550 million for the Westpac in the past year. That's down more than 40% on a year ago. If you use their measure, cash earnings, which leaves aside the one-off issues in their accounts, then it's $649 million, which is about 38% lower. So the banks are doing it hard. But I spoke to the chief executive, David McLean, this afternoon. He's actually thinking that the economy is in better shape than many people had feared. As he put it, we were fearing a V-shaped recovery hit from the economy, from the pandemic, I should say, which is sharply lower and then sharply higher. But in between, quite a bit of pain. He's suggesting that, in fact, the numbers show that it's not been as precipitous a dive as had been feared, and that the recovery is looking in better shape than many might have expected. So he's, should we say, quietly confident that New Zealand's economy may come through this pandemic not as badly scarred as many might have originally thought.
Let's move on to the Financial Markets Authority, which is obviously, picking up the cudgels again on KiwiSaver fees. What are they saying?
Well, they've issued a discussion document saying they want to hear from people and companies who are in the business about KiwiSaver fees. They're looking at revising their guidance to KiwiSaver providers on the fees that they charge. Among the issues they want to hear about are whether people feel they're getting value for money, what level of fees are being charged, and what level of service is being given. Interesting to look at the Morningstar survey that came out last week on KiwiSaver funds. And essentially the fees that were being charged for a lot of funds that are passive, in other words, they just track an index, were barely different from the fees that were being charged supposedly for funds that are being actively managed. In other words, the managers there are looking at moves in the market. They're buying and selling to try and maximise their returns, or at the very least limit their losses. But very little difference between the fees for either approach. That being the case, you ask, are you getting value for money? Are you being overcharged for the passive management? And that's a very good question. I have to say, this is not the first time that the Financial Markets Authority has brought this issue up. And I have a feeling that there's a hint of the paralysis by analysis in the approach to this, because in the end, 2 years ago, they were beating the drum alongside the Reserve Bank, suggesting that KiwiSaver providers needed to offer better value for money and their fees should come down. But clearly, on the basis of this, you might wonder whether, in fact, any progress has been made at all. If you're so inclined, all the documents on the FMA website, and the deadline is the middle of December.
And quick trot around the markets, Giles, before you head off?
Well, it looked a little bit on the soggy side this morning, down 50, 60 points for the local share market. It's trimmed those losses, just down 14 points. That's about 0.1%. 12,071 is where it's closed. And the New Zealand dollar just biding time, and I don't mean that as a pun for Joe biding time, 66 US cents and 94.1 Australian. We can expect that markets will be a little tentative as they wait the outcome of that US presidential election.
Thanks, Giles. Giles Beckford joining us with business news from our Wellington studio.